First off, I'm not Annabelle Pacheco. I'm Bill Gross, guest hosting today for the Multifamily Podcast every Wednesday at 2 p.m. Pacific Time, 5 p.m. Eastern. And I know I get asked a lot, how do I get started in multifamily investing? I'm a limited partner in various investments around the country. I've been doing that for a while, but I don't like coach or teach other people how to do it other than I ask questions and try to put people together. And my Annabelle is a very good friend of mine and partner in my business. Asked me to step in today. She's running a little late, but we have a chance to really talk to somebody who has a great track record of success, has an exciting program, Camilla Jeff. Camilla, thank you for joining us today.
Hey, thanks, Bill. I'm excited to be here.
So tell me about, is it Steady Stream Investments? Tell me about Steady Stream Investments. What do you do?
Yeah, Steady Stream Investments is my passive investor education company. So I focus really a lot on educating passive investors. I especially help the first-time passive investor get into their first deal, and so kind of helping them understand these complex topics in a more simple way. And then also, I go out and I vet different teams and different deals in different markets. And when I find a deal that I think would be a good investment opportunity, I bring it back to my group of investors and say, hey, who wants to join me on this one? And then we all go and invest together in the deal. So that's what Steady Stream Investments is all about.
How exciting. And so the website is steadystreaminvestments.com. And you have all kinds of goodies on there and interesting information. I'll put that up real quick on the board. The picture is interesting. Man, woman, and child holding hands in front of a beach. You kind of lost me with that. I'm not even paying attention to what you do. But I guess the idea is that you're passive investing so you can enjoy the life you want to live instead of work as hard as people like I do in my daily business. So, okay. And so you said is it a coaching program or educational platform, or how do you describe that again?
It's an educational platform, right? So it's where I educate passive investors about all the things they need to know, the ins and outs of passive investing, the risks, the benefits, all of those things. And so that's what Steady Stream Investments is all about. And I have a podcast called Quiet Wealth, where you can also get more information. Where I teach a little bit more broader things on quiet wealth. So I teach, right there. There you go. I teach 3 things there. So I teach, of course, investing, how to level up and become a real investor instead of just a 401k investor. I teach business building, how to combine having a business with your investing to play the tax game in the best way you can. And the third is generational wealth, because I have 5 kids. So how do we teach the next generation better financial skills so that they can, do better than we did as we're learning and growing?
My gosh, 5 kids. How do you get out of bed in the morning with 5 kids? How do you get to bed?
Get you out of bed.
I guess I get you out. How do you get to bed with 5 kids? We have a grandson, and we have a second grandson on the way. So the thought of having a second one, I watch my daughter manage that. So of course, where do you live? Where geographically, and then where'd you grow up?
North Dallas is where I live now. Where I grew up is harder to answer. I was a military child, so I was born in Germany. My father was in the Army intelligence, and so we moved around to lots of different states. But probably my high school years, I grew up in northern Utah. But since then, I've left that. My parents are still there in northern Utah, but I've lived in Arizona, Georgia, Indiana, Texas, Utah, and of course, Germany. So been around.
So I find it common in my interviewing people who invest out of state or out of where they live, that they've lived in a bunch of places. Like my life, I've lived in California all but 2 years. I spent 2 years in Florida. And I worked for a Texas company when I was younger. So the only place I've invested is Florida and Texas as a result. Gotta live many places. So geographically, do you encourage students to invest near where they live, or do you try to unlock that and create the opportunities where the markets maybe are more fruitful and there's more options?
Oh, well, I think it depends if you want to be an active or a passive investor, right? If you want to be an active investor, I do suggest starting where you live, just because it's more convenient, right? You know the area better, you know the people, you can go meet a contractor there if you need to meet a contractor. If you don't want to be active and you don't want the headaches of being a landlord and fixing properties, then being passive is actually a beautiful thing. So to invest wherever you want, so you can live wherever you want and invest wherever you want, where it makes sense. And that's what I love about passive investing and joining group investments, is because you don't have to live in the hot market. And you can live like me. I live way out in the boonies in Texas, like on a little mini farm, and I love it. But I invest in Phoenix, Arizona. I invest in Dallas. I invest in the Carolinas, and I invest in Oklahoma. And I have strategic markets that I can invest in from afar. Works great.
So I imagine in your educational platform, at least, you work a lot with people who never invested. They're going from 0 to 1 real estate investment, right?
Mhm.
So to me, that's always the most challenging. Once you've done 1, either it works out, you're excited, or it doesn't work out, but you learn some lessons, and then 2 is a little easier to do. But from 0 to 1, to me, always in anything in life, selling a house as a real estate agent, the first one was the hardest. What do you see as the common denominator of people who go from 0 to 1? And I'm sure you see people who spend years educating themselves, and they're stuck at 0. What do you see as the distinction from getting from 0 to the first investment?
Yeah, it's always a fun conversation. I love the first time I get on a call with first time investors where we chat about this and we try to and and here's 2 things that I always ask them. So one is, what's been your experience investing so far? And because I want to know if they've had any experience investing in real estate, or if they've just been a W-2 worker and they've just got stock market, right? Because they come at it from different approaches. So those who have some experience investing in real estate, they understand it a little bit more. They understand the ins and outs, and are probably a little more flexible, a little more apt to invest. Those have never done real estate are a little more skeptical, and they're just like, I'm just not sure. I've heard it's a good idea. I'm just not sure. I'm not really sure what to, how to do this. But they appreciate the opportunity to invest with a professional, with someone who's been doing it for a long time, like I have been. Um, and so they come at it from different perspectives and different angles. And the second thing I always ask them is, what are their goals? Because I want to make sure that the opportunities that I have actually align with them, because it would be bad for me to, take their money into an investment, but it's not something they actually want, because then that sets them up for frustration and in the future. So we talk about their goals. Like, do they need cash now? Are they trying to exit their W-2, or do they love their W-2 and they just want to build a nest egg for the future? What are they looking for? Do they prefer cash flow? Do they prefer equity appreciation, and where they are on that spectrum? Once I understand that, then we can dive into, okay, here's some opportunities that we have. Here's some things that you can look at. Here's things to know, and risks of investing. So I want to make sure they understand the risks. And I think the the biggest hurdle, I think, is the illiquidity of the investment, right? Because especially if they've just been investing in stock market, because they can get their money out at any time, unless it's in a retirement account, of course. Um, and so them trying to understand and realize that, well, actually, real estate is not a liquid investment. You put your money in. It's just like if you bought your own rental property. The only way to get your money back out of that is to cash out, refinance, or sell. Same thing with a group investment in real estate. And so helping them understand the illiquidity of the investment is important.
How much, you're obviously a wealth of knowledge, and just you're looking at your blog and listening a little bit to some of your content. You're obviously a very experienced investor. What percentage of people coming into your program are experienced and maybe looking to level up, or maybe they had to learn too much in the last couple of lessons and looking to adjust or changing their strategy? How often are you working with people who are more experienced, or is that not a market that you're looking to service?
Yeah, so in terms of experience, the people that I work with are ones who might have experience investing in real estate on their own, but it's their first experience in a group investment. And so that's in terms of how many come in with some real estate experience versus none at all. I think it's probably 50-50, right? Probably 50% of the people have some kind of type of real estate experience. Like the woman I talked to today, a new investor today, she's like, I've done I've done like 7 fix and flips, and I've got rentals, and I've got a short-term rental, and oh my gosh, I am so burnt out. I don't want to do this anymore.
I can relate.
I want passive, right? And
Right,
same, like that was my story too. And
right.
then the second woman I talked to today, she was a certified financial planner, which was interesting because usually those don't invest in real estate, right? They only do stocks. And she's like, no, I really need to invest in real estate, but I've never done it before. I'm well versed in stocks and bonds and, index funds and all of those things. But, and I have clients who have lots of real estate, but I've never tried it, and I'm going to try it, but I don't want to do it. So she said, I spent an inordinate amount of time like evaluating long-term rentals and trying to figure out a market, is like all of this excess time. And finally she's like, I just would rather partner with someone who knows what they're doing and learn that way. And then if I do want to eventually get out and do it, I'll do it. But she's got 2 little kids at home, and she's got a demanding job. She's like, I just don't have time for this. And so it's a kind of a perfect match for her as well. And so that's the type of investors that I talk to all the time.
Which is what they do in stocks and bonds. My son-in-law is his father really raised him to be a saver, which is great, and an investor, which is great. He runs a tax department for a wealth management company, and he's always poo-pooed real estate, and he is into stocks and bonds. But even there, he has advisors who recommend certain stocks that he researches. They kind of curate it for him.
Yeah.
Right. In a sense, you're doing that. You're kind of like the wealth advisor. And really, you're curating investments down to a couple that you think are good. Maybe you're participating in. Nobody's saying to the first investor, go look at every property in America and find one. Usually you're saying, there's 2 or 3 year you do, or whatever the number is, and they can participate in one or not. And it's interesting because now he does taxes. He has clients who have taxes and who have real estate. The tax advantages of real estate just jump off the page. It doesn't matter how much you like stocks and bonds. You got to pay taxes on all those profits. You don't have to pay taxes on the real estate, maybe, or until later. And there's other advantages to select, means of real estate.
Mm-hmm.
Talk a little bit about real estate professionals. Those of us who are in the business all the time, like me, I don't want to be a fix and flipper in Los Angeles. There's rental issues, there's business issues, there's tax issues that scare me off, but I do love real estate. And so I'm a passive investor out of state. I see so few realtors who invest in real estate because it just doesn't match up with their business. And I get that. It doesn't make sense for me to have rental properties to be a real estate broker. I'm too busy to deal with that. I don't want rental properties in California. Do you find real estate professionals coming to you saying, hey, I want to buy real estate, but not where I broker. Can you help me get out of state?
Yeah. Yes, a lot. And actually realtors are a real interesting one, because I was a realtor at one point in my career, and I got my real estate license so I could, for all my investing purposes. So, before I found group investing and passive investing, I spent 15 years of my real estate investing career like DIY, right? Just me and my husband just doing our own thing. And I got my real estate license, and it was really interesting as I started networking with other realtors in my brokerage and other brokerages, how they never invested. And I couldn't figure out why. I was like, wait a minute, why are you not investing? Because you have the insider knowledge, right? You have the knowledge of the market. You know what's happening here. You know which street is a good street to buy a property on, which street is a bad one. And yet they're not investing. And as I dive into that more and talk to more realtors or real estate professionals who are in there, it's the same story. They're just addicted to their paycheck, right? And then they're so busy that they don't feel like they have time to actually properly evaluate and take care of rentals and tenants and stuff. But
Well, if
but
you're
I
running
have
a
a bunch
full-time
of them.
business, it's hard to run another business, right?
Yes,
I mean, I have a
it's
full-time
another
business.
business. Hmm.
Yeah, I'm not looking for another job. I'm looking for investment, right? So I see why realtors, so the format of that doesn't work, but there's other formats. Passive investing then becomes
Yeah.
the obvious answer.
Yep. Exactly. Passive investing is kind of the solution to that, right? You believe in real estate because you're in the real estate world. You know it's a good vehicle to building wealth,
Yeah,
but you just don't have time to have your own business doing
yeah.
it. And so you join the group investments and you get an investment passively, and now you're on your way.
The common complaint I hear from people who either haven't jumped in yet, or maybe have bought a few properties in the past few years and are looking at the market today, is that the numbers, obviously we're in a market, I think, that's adjusting, right? In so many businesses,
Mhm.
prices are adjusting, and cap rates are adjusting, lenders are adjusting. I know as a real estate broker, listings right now are probably twice as hard to get, but twice as valuable as a normal market, because when I get it, if it's price rated, I know it's going to sell. And investments, I would think today, it seems to me, I'm not vetting them like you are daily or regularly, but it seems to me that they're 2 or 3 times harder to find good deals. But if you find a good deal today, if you can find a good deal that cash flows today at the rates we have, you're probably in a good time to
Mhm.
buy, because rates go up, they go down. When they go down, you refinance, you pocket those profits. So I imagine right now you must spend a lot more. Either you spend a lot more time looking for deals, or you're having a hard time finding them. How would you describe it?
Both, right? We spend a lot of time trying to find the needle in the haystack. And I tell my investors that 2023, it's probably going to be a little bit sparse, right? They were used to seeing 5 or 6 deals a year from me coming across their desk as opportunities to invest with me. And now it's not going to be as many, and there might be 3 or 4 instead of 5 or 6, because they are a little bit harder. They're harder to come by, especially right now, because we're kind of in that mode where sellers still want a high price for their property and they're not willing to kind of come down on their price. And so deals are not penciling. They're just simply not penciling. The good news is there was a deal that we found earlier this year in one of our key markets, which is Oklahoma, Tulsa, Oklahoma, and it was 100 units, and it was a deal that we could assume the loan. So we were all over that one because it was a fixed rate loan, still had 6 years left on it, and in multifamily world that's a long time. And we got that interest rate at 3.67%. So those are the deals that we're going to absolutely jump on because they will definitely cash flow. Now, will deals cash flow by just getting a normal loan that is in the 5 to 6%? Yeah, of course they will. I mean, I've been around long enough. When I started investing, I was getting loans in the 8%, and it wasn't that big of a deal. Just as long as the numbers work. If the numbers work, they work, and they can always work with any interest rate. You just have to have enough cash flow coming in to cover that mortgage. And then you're right. Like if you do buy at a time where the interest rates are high, then that just means opportunity for refinance later on later on in your investment, because you're playing the long game. And that's what I try to tell investors too,
Right.
is that real estate's the long game. Like I'm not providing any get rich quick things over here. That's not my model. My model is to get rich slowly and securely over time, right? And that's what we do.
Yeah, and I think that's the other thing is the a lot of the story of real estate, a lot of the hype and the social media is, hey, I have one deal that was life changing and we made millions of dollars, and those are great, and those do happen. And I've not personally had $1 million profit, but I've had deals that were like life changing where I made a lot of money on one deal in certain markets at certain times and everything lined up. But that's not the norm over time. And time is, properties go up in value, your loan balances go down, you get tax advantages, and then you take the money and defer the taxes in the next deal. And over time, you end up with a big pile of chips, and that's the whole goal of it. So I think sometimes it's about getting people's expectations lined up. And I think you hit on the head about the gap between buyers and sellers and the investments. I can tell you on the residential side, I think the buyers and sellers are playing that game of chicken, and sellers, for the most part, are able to hold fast or adjust slightly. And I'm getting everything sold. Now I'm in Los Angeles. I'm not in Phoenix. I'm not in Las Vegas, where the market's being impacted more. I think LA is kind of the middle of the market in terms of the corrections, nationally. But it just seems that the market's not as bad as the press makes it sound. It is, an adjustment from where it was. So you say you saw property recently that was off market. Are you doing more? Is there anything you're doing different, I guess, to try to find deals now? Because I would think you'd have to, work twice as hard to find deals today as you did a year ago.
Yeah, we do. So right now it's all about networking, right? And we're just trying to find the other sellers. So in one our key market like Tulsa, right? We are out there, my partners are out there just trying to meet every apartment owner in Tulsa so that they can get to know them and then let them know, hey, if you want to sell your property, come talk to us first, right?
Yes.
And that's how you really find deals, is by actually doing that, instead of waiting for a broker or somebody else to put it on the market.
Hey,
And
hey,
now
hey, 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 hey. No, just kidding.
I know.
In multifamily, you're 100% right. That's really how it's all done. It's the oddest thing,
Mhm.
but you're right. It's all talking to people before there's a broker. I get that. I mean, I'm
Yep.
sorry.
Well,
I'm just playing
and we'll
along.
use a broker to help with the transaction, but it's just, that if that seller knows you as a buyer, they're going to be more apt to negotiate with you. They're going to
Right.
be more apt to, agree to sell their property to you at a decent price, rather than just trying to put it out at a super high price. So it just kind of depends on the motivation of the seller.
It seems to me the sellers do that. They discount it by at least the commission and usually a little more. But if there's somebody they like and the deals and the negotiation is easy, they don't mind it. And that's the
Hmm.
distinction, right? Versus, I think the thing sellers hate is you list the property and there's that period before it gets offers that they're always feeling rejected. And I try to tell them that's just the business. Don't take it personal, but they seem to take it
Yeah.
somewhat personal that nobody's writing an offer on their golden property day 1 or day 2 or day 15. So
Yeah.
well, look, we have got a bunch of you watching this, so feel free if you're watching this live on the Zoom call to put a chat in the chat box, raise your hand. If you want to mute yourself and jump in, glad to take questions. I'm really excited. I could talk to Kamala all day long. I love talking real estate. I love learning, and so appreciate that. But you as well, if you have a question, feel free to jump in here and take advantage of the opportunity. Um, so you have your podcast, and that's something that you record. You don't do it. Do you do it live? Do you do it just when you record? And
No,
how?
it's a normal podcast where I record it and then it goes up. And so so I have 2 episodes a week. So every Tuesday and Thursday, a new episode drops.
Good. Well, Dr. May Lee says she'd love to learn from you. So there's your opportunity. Go to CamillaJeffs.com is the website if you want to get more good stuff from her. I must be mispronouncing your name. Pronounce your first name for me.
Camilla.
Camilla. Yeah, I was wrong every time. Camilla.
That's fine.
I'm in California where we have Kamala Harris, but then it's not Kamala Harris. Nobody knows what it is.
Uh,
But Camilla is like
yep.
isn't that the
It's like
consort to the king in England?
yes.
What's her name?
Uh-huh.
Camilla. So
Yeah.
you're
King of England's wife, Camilla.
there you
It's the
go.
same.
Camilla Bowles. So you're like she's not the queen though. She's the not the first lady. I don't know what she is, but Camilla, well, you're very
I don't know what they
sophisticated.
call her. He's the king. I think she's called
Yeah.
the queen, but not,
I
I
don't
don't know.
think she's not, I don't think she's because she's not
Maybe
royal.
not.
Who
Now I'm gonna have
knows?
to Google it.
The whole thing is kind of like a Disney movie or something, kind of crazy. Okay, so let's talk about, obviously, when you're investing money in real estate, you are committing it for 3 years, 5 years, maybe longer. You put your money down and you got to get your deal together, get it financed. Um, I don't know how you look at it. To me, it seems like, there's some rocks ahead, there's some icebergs, in the ocean, yet, you got to do something with your money. Stock market's no panacea. Saving money in the bank at 0% is not fun either, having done too much of that in the last year or two. So how do you kind of negotiate the rough waters and winds that are predicted ahead of us? How do you look at that? How do you describe it when you talk to investors?
Yeah. Well, so I talk about, the looming recession. I actually just recorded a podcast episode about this, about, the recession. Is it a good time to invest during a recession? And actually, there's pros and cons to it, just like any time, right? There's pros and cons to investing at any moment. But the nice thing about a recession is that if you look back at all the recessions that we've gone through, there's been 11 of them over the last 75 years. A recession is it's just something that happens. It's just like a hurricane, right? So we know a hurricane's going to happen on the coastline. We just don't know when it's going to hit or how severe it's going to be. Does that mean that we stop going to the beach? No, we still go to the beach and we enjoy the sunshine and then when it comes, we make adjustments and we prepare, right? So it's very similar with a recession. Nobody knows when it's going to hit or how severe it's going to be. We've had severe ones and we've had not very severe ones in the past. And so I don't think it's something to fear. for example, I think it's something to just know that, yeah, it's going to come and go, and just be prepared. So one of the ways you can be prepared in a recession is with cash, right? So that you can pick up the bad deals. So in 08, 09 recession, for example, the Great Recession, that's what they call it. I don't know why they give it the label, the Great
It wasn't
Recession.
great. I lived through that. It wasn't so great.
It wasn't. I know. I lived through it too. So if you take like the Phoenix market, for example, in the 08, 09 Phoenix market, single family housing just totally tanked. And a lot of people lost their houses, lots of foreclosures, lots of short sales. But the people who bought in Phoenix in 2010, they did pretty dang awesome, right?
Right.
And over that 10-year span, and even like the boost of 2020, 2021, like, wow, right? They've got a ton of equity. They've made a lot of money in real estate. So recessions are actually opportunities for real estate, and can be really good for you as a real estate investor. So, but I love dollar cost averaging. So if you are familiar with dollar cost averaging, is something that financial planners talk about in stocks and things. It just simply means just always invest, always be investing, because if you average your investments over it, then you're gonna be ahead. So don't stress about, oh my gosh, it's an up market, I really need to buy a whole bunch of real estate right now, or oh my gosh, it's a down market, I shouldn't buy anything, or the reverse, whatever. Don't get caught up into that. Just follow a strategy. And my favorite strategy, especially for passive investors, is invest $50,000 a year every year for 10 years in a row. You get one of those every year for 10 years. And I put together a whole thing on this, and you can find out on my podcast. But over 10 years' time, you almost have $1 million invested. You are about $70,000 in passive income. If your deals go average, right? If your deals go on average. And so that means some of those deals are going to be home runs, some are going to be lemons, and some are going to be in the middle. And then you don't have to stress about getting into a bad deal, right? Or a super good deal, super awesome deal. I think people get kind of hung up on that. And for me, I just rather just say, just do one a year, every year. Make sure it follows some decent metrics. But don't hoard your cash waiting for the best deal.
Right.
But then also don't just throw your cash at any deal that comes along. So, be conscious about what you invest in.
Well, a couple of great points you unpacked a little bit. One is, if you're investing consistently, you're diversifying, right? So you said one investment, you have 10. And second, I think that you also, each investment has to make sense. The problem in 2008 and 9 was people bought property that made no sense because it was going to go up forever. The movie The Big Short was so accurate. They had the scene where the guys with the strip bars, these are strippers who didn't know they owned 3, 5, 10 properties. They just kept signing papers, and then they owned property and it was going to go up and they could refinance forever. But that's not really investing, that's speculating. But if you're investing, you're looking at the cash flow, you're looking at your investment. And I don't think in my lifetime anybody's really been burned who did that, with the exception, I think there are people who are having trouble now where they're doing value adds and can't refinance a construction loan or can't refinance their bridge loan, and they didn't have the proper finances in place, they're going to have a little bit of a problem. But I think if you follow I didn't do those deals because I wanted people who had rate caps, I wanted experienced investors, and I wanted work with experienced teams. I think if you use good metrics, in my lifetime, nobody's really ever been burned on real estate investing, because you just hold it as long as the cash flows. What do you care what the value is? You're getting a return every month or every quarter or however it works. So, hey, there's Annabelle. Annabelle, thanks for joining us.
Hi.
Enjoy this conversation.
I'm so sorry. I'm so sorry I ran over at a meeting, but great information. I've been in the background. I've been listening to the whole thing. So thank you, Val. It's been great. And Camilla, thank you so much for being a guest on our call. So what happens when someone invests $100,000 and doesn't get any cash flow?
Great question. Great question. So I'll actually give you a real live experience. And Bill, you alluded to this, how there's some multifamily properties or some group investments that might be in trouble right now. So of my 15 deals that I'm in, I do have one that is struggling, that was bought with bridge debt, that did not have a rate cap. And so right now it's going through what's called a capital call. And capital call, if you don't know what that is, that just simply means that, the property is run out of cash. We need some more cash to get through the rough moment, in order for the property to continue. Now, I think about this in terms of my single family investing. I did this all the time in my single family investing. I had a house that, oh, the roof just started leaking. Okay, that's 10 grand. Well, I guess I gotta feed it or lose it, right? I can't just lose the property, and I also can't sell it because nobody's going to want a house that has a leaky roof. So I have to feed it, right? So stuff like this happens. Now, in a group investing, we try everything possible to avoid this. This is kind of it's not the last resort, because we have to follow a process and a procedure according to the legal documents, right? So the legal documents spell out what the process is. And so when a property gets in trouble, like the general partnership team, first thing should be aggressively cut costs. Try to make sure that you're cutting any costs that you can that's not necessary. Second is look at your loan. Is there something that you can do to change the type of loan that you have? Third is go ask the general partners to contribute cash. Like, can the general partners get it through and get this property through the period? And then you go out to your passive investors and say, hey, passive investors, we've been trying really hard to get this property on track, but the headwinds are a little too much for us. We need some extra capital in. And so typically what happens is they'll ask for a percentage of your original investment. So say you invested your 100,000, like you talked about, Annabella, they would ask for, I don't know, 20 to 35, 40% of that for you to contribute. Now, as a passive investor, you can decide whether to contribute or not, right? It's not a requirement. It's not something you have to do. And so we're in this process right now with a lot of investors, and as we go through this, and we're deciding, okay, do we contribute? Do we not contribute? What's our confidence level in the new business plan, because they have to put together a new business plan to get out of the rocky waters. And how do we do that? And then after that, after the passive investors get the opportunity to put more capital into the project, then you can go out and accept capital from other investors. So it could be something like a rescue fund. I've heard, that are out there that can kind of help. And there's going to be a lot of this that's going to be happening this year. So, if you're in any deals and you're experiencing a capital call, or you haven't yet, but you kind of see the writing on the wall that, this property's not going really well. It's really hard to refinance right now, because especially if the property is not doing well in its occupancy, the lenders are not going to refinance, and you can't sell. And right now is a bad time to sell for the most part if your property is struggling. So there's going to be a lot of this that's going to happen this year. And, I have one that we're going through it right now. But we do have a path to profitability, and we are working hard to get that property back on track, so that we can, get that. So what we're doing is we're raising funds so we can buy another rate cap, so we can keep the mortgage payment lower the mortgage payment, so we can do that and then finish the renovations, get that occupancy back up, at which point we'll be able to refinance into longer term debt. And then the hope is that the interest rates won't be as bad in 6 to 9 months from now, but you never know, right? They might be worse, right? Like, who can tell
Right.
where they're going to be, but then we'll just have to make that decision at that point.
And what does a rate cap, I'm sorry, Bill. And what does a rate cap usually cost when you're buying?
Oh, a lot, right? So it depends on how big their property is. So this one, for example, is a 250 unit property that we have. We want to buy a 2-year rate cap that's at 2% over LIBOR. 2% rate cap. So that's going to cost us about $2 million. It's a lot.
Yeah.
Right. It's a lot of money.
And
however,
even
the financial
factoring that in-
models, yep. The financial models show that as soon as we get that, we will get back to cash flow neutrality. And then once we continue to get the property going and more occupancy and complete the renovations and get the NOI up, then we'll be at cash flow positive and be able to give a return to investors.
Okay.
Yeah, I have a investment where they had, value add, they had the wrong, property managers on premises. They didn't get it rented out properly. They had to replace the team on a larger project. And so everything was just delayed by 3 to 6 months. And I think there's two aspects. One is the planning financially, and the other is having a seasoned team that knows the market. They had another team nearby they could kind of lean on temporarily as they hired more people and promoted some people. It wasn't like they've never invested in that city before or never managed a property in that city before, and they're able to move pretty quickly. But we have a lot of people who wanted to get into securitization last year and the year before and had the first time project, and there were overheads when things were going well, and now we have some headwinds and they're having a real tough time. And so I think you can always poo-poo experience and management and success until there's a problem, and then you go, well, how come they didn't anticipate this? Well, they've never been in this before, so they didn't really plan ahead. So that's where having a set of eyes like yours looking at it helps. That's where having a track record of success is important, and having a financial is really important as well. Okay.
I think you and I are talking about the same one.
Yeah, I think so. Maybe. So we're both investors in it, I think. So yeah, and they communicated, and it's funny because like the head of I was introduced by one of the fundraiser guys. I don't know what you call that person, but the president of the organization sent an email saying, "I'm glad to talk to you." And I said, "Yeah, I'll talk to him." Not me personally. He sent it out to all the investors. I said, "Yeah, I'd like to talk to him and see does he know what he's doing." And after talking to him about 5 or 10 minutes, I realized, yeah, no, they're on the game, and they're making those adjustments, and the return was less, but I wasn't surprised. The return on stocks I bought was negative. So, it's not,
Yeah.
True.
it's not the
Keep
amount
it
of
in perspective.
Yeah, it's not like I'm not familiar with the concept of losing money. I mean, but I didn't lose it. And also we still had the investment, and I'm just like, and I got a minimal return. I didn't get the 3 or 4% we planned. I think 1.5%. But whatever it was, I'm glad to always get money. I didn't have to write a check out or cover it. So yeah. So that's the challenge.
Well, you have a better attitude about it than I do.
Well, I'm a passive investor. I think sometimes you can mistakenly look at like you're active and expect it to be like your employee. It's not. It's an investment. And look, today you and I both work for a broker with EXP Realty. So I've been with them now for 4 years. I got a lot of stock when I started at $1 a share, $2 a share, $3 a share, and it ran up. My wife bought because she was so excited when it ran up to like the equivalent of $40 a share. It split 2 for 1. It was 80, but it was 40 today. Bought like $10,000 worth of stock. Not a lot, but it was to her, it was a chunk of money. And it went from 40 and now it went down to 10. And she's, but using your principle, Camilla, that whenever I sell a house, I get some stock. I have a bunch of the $1, $2, $5, $8 down, and today it went from like 11 to 12.50. That's a good day, but I'm not selling it today. In fact, in some regards, to your point on the market we're in, it's kind of better that the values are depressed because my investment dollars are going a little further. Because I'm not cashing out today. I'm investing for 10 and 20 years down the road. So if you play the long game, you don't watch the value. You want to protect your asset and you want to watch the cash flow.
Well, and then that property appreciates, and then you not only make your cash flow, but then your money could double, right? Triple in the long run. So I mean, this is not a get rich quick deal. No. I mean, this takes time, and I happen to, when I got involved in investing multifamily, I kind of hit one of those really good deals, and I bought at the right time, and I was able to 5x my money, right? That doesn't happen all the time. That doesn't happen. But I do think we need to prepare ourselves, because I think these opportunities are going to be available to many investors come these next 6 months, six months to a year. I think that we're going to find more opportunities out there.
Yep, well, I agree.
And how many investors do we all know that we come across who are waiting for the moment of the bottom of the market? They're waiting for there's be some kind of a bell and lights and fireworks saying, okay, now is the time to invest. We hit rock bottom.
Yeah.
But between now and then, I hope to put a couple of deals together and make money of those too. I mean, I don't know where the bottom is.
Mhm.
Yeah.
Yeah.
You always know where the
You
bottom
know,
is about 6 months later, I think.
when I educate investors about the risks of investing, one of the risks that I talk about is the risk of a better deal coming along, right? Because we all are like, well, maybe there's a better one around the corner. Is this a good one? Or maybe there's going to be a better one.
Yeah.
And really, it's just you can't just hoard your cash for the best deal because you'll never know what the best deal is. You just gotta, and when you see a good one, get in it, and and do that, every single year, at least once a year.
Look, I'd heard that plan previously, and I was supposed to make that investment last year, and I have more than $50,000 in cash that I'm getting 0.00001% interest. So
Nice.
almost any real estate's done that well, right? So
Yep.
Sylvia wants to talk about Las Vegas. Let's talk about Las Vegas. Sylvia, what's going on in Las Vegas? Is that where you are, or is that where you want to invest? Let's get you unmuted if we can. Do you want to talk about Vegas? Do you want us to talk about Vegas? I don't really have a lot to talk about. I go there every November for a convention, but Camilla, do you have any investments in Las Vegas, or have you invested in
I
Las Vegas?
don't. So I'm not super familiar with that market.
Yeah. Yeah, it's
I
one of those
know it.
markets.
I know it went up really fast, and I know it's struggling. My sister just moved there and decided not to buy a house just because of the market. She's like, yeah, it's not the right time to buy in Vegas. But yeah, I don't have any investments in Vegas.
Well,
In my
It's
entire
not one of my
career,
favorite cities.
in my entire career, it's been one of the most volatile. It has been one of the 2 or 3 most volatile
It
markets
is.
in
It's
America.
weird.
It's just and that's the nature of Vegas. It's boom or bust. One day you have a huge casino, next thing you know, they're knocking down and building a new one. And if your primary asset is just a lot of dirt, then it's easy to replace viable real estate with more real estate on the cheap dirt. So
well, I bought last, wait, what are we? 23? I bought.
last year in 22, you bought.
Yeah,
You bought
last
22, but you have a unique market that's based in Vegas, right? That they go to Vegas for their business.
right.
And so it's kind of like you do like a temporary housing or short-term housing thing, which Vegas supports.
Correct.
And you have an insight on the buyer side of that.
Correct.
Because people go there that you book. Yeah,
Right.
so that's nothing wrong with that. I think that's great.
It's a niche. It's a niche.
It's a micro niche.
It's a micro niche. You're right.
Mhm.
And honestly, I mean, I was able, and I had shopped around for about 6 months, and this is when the real estate market in Vegas, there were absolutely no houses available. The inventory was like none. And then all of a sudden, these same properties that were on the market 6 months ago were on again, back on the market. And now it's not just one, now it's 100 of houses that are available. So for me, it was the right time. And I had a house with 6 bedrooms that I was able to find where there were no other houses even close to a 6-bedroom home that I was able. So it just kind of all worked out. I mean, like, I think when you put your mind to it and you really are looking for something specific, like you said, it's like a needle in a haystack, you find it. Like it'll appear. So, I mean, I have to say that for me, it was a great buy. And that was in Vegas.
But again, it's unique in that you have your husband has a business that needs short-term housing, so you can direct people in and create some demand for yourself and or fulfill the demand. So that's a great opportunity for you. Sylvia, I'm trying to unmute you. I don't know if you want to have something you want to add to it, or if we put in the chat box, Sylvia. Love to participate. No, okay, very good. Well, that's a no. That's Bill. No, get me out of here real fast. Okay, okay. Sorry, Sylvia.
And then Brian says it's like driving a car, pick a destination, get a direction, and get in and drive, and things happen along the way. So true. So true. I mean, you can do this anywhere, wherever you want to go.
I invest in Texas and Florida, not because it's anything other than I'd like to go to Texas, I go to Florida. So it just works out. There's some great markets in America, North Carolina, Tulsa, I just don't go there. I don't have any reason to go there.
Right.
I'm not planning to go there. I don't want to travel anymore. I want to travel less. So it's just the way it goes. But I think you can, I see people all the time who find a market, do their work, and find a way to make it work for themselves. Any last thoughts here, Annabelle? You want to wrap up? We're lucky to have Camilla to have on, and she shared with us her website and her podcast and other resources.
Did you put all your info, Camilla, on the chat?
Yeah, I can throw it in there.
Yeah, throw it in there. I mean, it's great information. Anyone that wants to follow her, please do and check it out. And thank you. And Brian, welcome to the call.
How are you?
Nice seeing you again. Brian's from NCE, Bill. That's where I met Brian.
Very nice.
Yes, and let's see who else we have. Someone on an iPhone. I don't know who that is, but yeah, no, I think we're good. Thank you, Bill Gross, for helping me out.
My pleasure.
And Camilla, thank you so much for joining us. And you know, you're always welcome to bring a wealth of information. Thank you. And we meet here Wednesdays at 2 p.m. Pacific Standard Time. Paul Krause also hosts this call with me, and Bill Gross does as well. So we're all here, every one of us, you know, trying to learn more about multifamily, trying to connect with more people about multifamily, and bringing whatever knowledge and whatever it is experience that we have to this call, so that, you know, we all can really learn and benefit from it. But thank you guys so much for joining our call, and we'll see you guys next week.
All right.
Thanks,
Thank
Ray.
you.
Well, thank you so much. It was fun.
Take care. Bye.
Bye-bye.